I'm Patrick, and this is Think Wealth. Equity markets globally has had a stellar run as of November 2017. We had about double-digit returns across the board most markets, both in the US as well as in Japan, and also in Asia ex-Japan. For example, the Nasdaq is up by 25% year to date, the Dow Jones is up by 20%, and nearer to home, the MSCI ex-Japan is up by 33%. Malaysia itself has the most subdued returns of about 8%, but generally speaking, we think that the markets will continue to run going into 2018. So what are the key drivers that's driving equity markets in 2017? Firstly, we live in a world where interest rate continues to be very low, and that drives basically central bank policy to be very more accommodative. Secondly, the global economy continues to be on a synchronized recovery, which means that drives basically my third key most important point, and that is corporate earnings growth continue to improve across all market segments that we invest in. So what do we expect in 2018? Firstly, we believe that the momentum of the synchronized global growth will continue in 2018. World Bank basically estimates that global growth will hit about 2.7% in 2018, up from 2.6% this year. Secondly, we believe that policymakers are cautious about tightening monetary policy too quickly. And last but not least, the more important point here is corporate earnings growth will continue to be more evenly distributed in 2018. So, what are the major investment themes for 2018? Firstly, we believe that the rise in global capital expenditure will continue in 2018 and will impact the companies that we invest in. Secondly, the investment theme that we like at the moment is One Belt, One Road. Basically, this is an initiative by the Chinese government to basically invest in a lot of infrastructure projects across the Asia Pacific, and we think that this will be a very major investment theme in 2018. And lastly, Industrial Revolution 4.0 is a major theme that we continue to like. This means that at the end of the day, we will invest in companies that are of Internet of Things, robotics, automation, and so forth, which in line with our Industrial 4.0 investment team. What is our regional equity strategy for 2018? In short, we remain positive. Why? Because as I said earlier on, global growth continues to accelerate. Commodity prices remain very firm, and lastly, China producer prices ought to be in a positive territory going into 2018. From an earnings revision point of view, what are we looking at? We are looking at a broadening of earnings base, because this year the earnings have been concentrated mainly on the technology sector, and we think that in 2018 it will start to broaden out into the other sectors, which gives us an opportunity to invest in more sectors and make more returns in the future. And most importantly as well, we are also anticipating at least 12% earnings growth, which translates to a PE of about 13 times next year. So what are the sectors that we like? We continue to overweight the internet and technology sector in China, Singapore, and Malaysia. We continue to like also the financials and energy sector in India, and also industrials in Malaysia and India, as well as materials in China and Korea. And last but not least, we also continue to like the consumer staples in Thailand. So what is our Malaysian equity strategy for 2018? We remain positive on the market, and we will continue to buy on dips. We believe that EPS growth will be about 7% in 2018. And what are the broad themes that we like in Malaysia? We like the construction sector, e-commerce and logistics, tourism, and technology. I've been asked by a lot of investors whether or not markets are currently overvalued. The short answer to it is that we think that in Asia and Japan, as well as in Malaysia, markets are relatively valued. which means that there continue to be some upside going into 2018. Why do we say this? Because we are expecting, as I mentioned earlier on, at least 12% earnings growth for Asia and Japan, and another 7% earnings growth in Malaysia that will support the equity rally going into 2018. Essentially, we think that the risks that we want to look out for are things like inflation going up slowly in 2018, and we also want to watch out for whether or not the dollar will continue to rise faster than where we are today, which may impact Asian stocks, for example. And also, we also need to watch very carefully the economic environment as well as the political economy in China and whether it will impact the rest of Asia. And of course, geopolitical risk is still in the horizon in 2018 in many countries across the globe, and we're watching this very, very carefully. Lastly, I would like to wish everyone a Merry Christmas and a Happy New Year.